In this presentation, we're going to reconcile our credit card account. In other words, we've imported the information using the bank feeds or the CSV file. We've reallocated that information to categorize it for our financial statements. Now we want to be reconciling the balance with the credit card statement. Get ready, because we're dropping in with Wave. Here we are in our Get Great Guitars dashboard. We're going to start off by opening up our reports down below on the left-hand side. That, of course, being the balance sheet and the income statement, the P&L, the profit and loss. We'll start off with the old balance sheet. Opening it up. Once open, we're going to right-click on the tab up top so that we can duplicate it. Then we're going to go back to the tab to the left, do the same process for the P&L, the profit and loss, the income statement. We're going to be opening it up by selecting that item. And then go into the tab up top, right-clicking on that tab and duplicating it. Then we're going to go back to the balance sheet, change the date because we're going to be in 2019. That's when we uploaded our data for. And then I'm going to upload that report or update that report and then go down to the bottom and we'd like to show the details for it. Then I'm going to go to the income statement. We'll do the same thing here, selecting the drop down. We're going to go to 2019, update the report, go down to the bottom of the report and show the details for that report. Then let's take a look at the balance sheet one more time. So in the balance sheet, we're going to scroll down. We enter the data and notice we have a balance in the credit card account of the 663. Now that if we look at our statement, our balance here is the 1250. So we kind of got to reconcile that. One thing we got to do is have the same ending date, which should be April 30th. So let's bring this on back to April 30th. So I'm in 2019, but that's not good enough. It's got to be at the cutoff date on April 30th. So we'll bring it on back to April 30th. There we go. Update that report. And there, we're still not there. Now we're at the 250. Why? Because we're missing the beginning balance. So we got to be adding now the beginning balance. That's going to help us to reconcile to that 1,250. A couple ways we can get there. I'm going to go back over. I'm going to go to our first tab now. Let's go back to our accounting information and let's go to the transaction stuff. We're looking at those transactions that we have uploaded. I'm going to select the drop down and we want to just look at the credit card information. And then I'm going to add something here. And we could just do this by adding another item. So I'm going to add another item. We could try to add an expense. I think it might be easier to add a journal transaction, just to do this with a journal entry. So I'm going to do this with a journal entry. And I'm going to say that there is, this is how I usually see this in terms of debits and credits. Now I'm going to make this the journal entry as of the 1st of April. So April 1st. The 1st of April is April 1st. And so there is that. And then we're going to have the debit is going to be going to, now it's not going to be an expense because it's something happened prior to us putting this information into the system. So I would imagine it, if it was an expense in the past, then it rolled over into the retained earnings in some way. So I'm going to say it should be part of equity in some way, shape, or form. Now again, if it was, you want to do this as of the beginning of the year if you can, because then you can put things into equity safely. If there was information in the prior month that we have to include from the credit card, then we would need the credit card data for the prior month, right? But if we're just having the cutoff, I'm saying, hey, as of this point in time, I'm going to enter this stuff in as of now going forward, then you're going to just put it into the equity account because the prior periods would have rolled over into equity. And if you want to know any data prior to this point in time, you're going to have to look at the prior financial statement. So I'm going to select the drop down. We want to put this into an equity account. That's what I said. I put a lot of detail into that, and then I forgot what I was doing. So we're going to be down here in the equity, and we could put it into the investments. I'm going to put it into the just into owner's equity here. So we'll put it into owner's equity, and then it's going to be $1,000, 1,000. Then the other side is going to go into our credit card account. So it's going to increase the credit card balance. That's going to be the credit. So I'm looking for the credit card. There it is, and that's going to be for 1,000 as well. There's our debit and credit, so I'm going to go ahead and update that. We could put a note. We should probably put a note. Like this is the beginning balance. There, that's better. All right, so then I'm going to save that, and we have it. Then I'll go back up top and check it off. And is it checked? It won't let me check it. So I'll save it down here again. I see the problem. I put 10,000 over here. It's not in balance because I put an extra 0. So I was just showing you that it won't let you be out of balance, which is good. That's good. So then I'm going to save that, and then let's try to check it off. All right. That was a good demonstration. I'm going to go back up to the balance sheet then. We're going to update this. Let's update this and see what happens now. We'll update this report. We're going to go on down to the Amex, and now we're at the 1,250. So that matches out our statement here. Then you can imagine if you made a payment on it, of course, the payment would be going through the bank feeds. So if you made an electronic payment, you could wait till it basically clears then the bank account, and then it would clear the bank account, and then this would be this amount minus whatever payment that you end up making. So that's going to be that, and the other side we put to the equity. So it's in these owner's equity account, meaning it didn't hit the income statement. We don't want to hit the income statement because this is the beginning balance, and again, we had the cutoff here, assuming all other stuff happened, prior to our financial statements. That's how you'd want to think about basically the beginning balances. Let's go back over to the first tab. Now, you could also go back down to this reconcile item in the accounting and say we have a reconcile item for this credit card, so we can reconcile that one. And then I don't think I did the date last time. We should bring the date all the way back. You should have the proper date here. And this should be April 30th. And the reconciled balance then should be, as of that point, 1250. So we're going to say 1250 and save that. And it is in reconciled. It's saying that it is reconciled at that point in time. So that's going to be it for now. Let's get out of here.